Now, one of the challenges that we face in trading is actually entries, right? How to enter a trade, how to get those sniper entries that you see, how to get small risk stop loss to get a bigger risk to reward. Now, in this video, I'm going to be sharing my most powerful entry strategies. Like when I say the most powerful, this entry strategy changed the game for me entirely, trust me. And I know that after watching this video to the end, it's going to have the same effect on you. Definitely going to change the way you see the chart, the way you enter, the way you execute. It's mind blowing, guys. So if you're new to my channel, guys, my name is AJFX. You should consider subscribing because we're about to go on a journey on this channel right now, right? If you're a returning subscriber, thank you so much. Make sure you like this video. Make sure you share it to someone that actually needs this, because this is going to be an amazing mind-opening video for you, right? So without any further ado, let's get to the chart. All right, so candle sweep entry here. So before we go into the chart, we're going to look at some criteria that we need to understand before start applying this entry model. Right, so the first one here is to understand the AMD concept. Now, this is very integral part of this module because the AMD concept is what we use for this particular entry strategy. Although this particular entry strategy is a candlestick based strategy, right? So let us assume we have something like this. The market is giving us this kind of accumulation, right? AMD stands for accumulation, manipulation, and distribution. So let's assume we have this manipulation. Normally after an accumulation like this, we want to see price break out, right? And either move to the upside or to the downside. So let's assume the price is moving to the downside. Now, what these institutions usually do is that because they know that probably almost everybody knows that the market is going to drop. So they're going to do what? They're going to push the market up to sweep out all the liquidity that is stop losses around here. Then they finally drop the market back into the structure, and before you know it, we have a drop and a distribution like this. So this is actually the accumulation. Then this move to the upside is the manipulation, and all of this right here is the distribution. Right, so this is the accumulation, manipulation, and distribution. Now, this is basically how the AMD system works. Now, relating it to our strategy, that is our entry strategy. Sometimes in the chart, we usually see the market give us an accumulation phase like this. No matter how small it is, it might be in a smaller time frame, it might be in a larger time frame, and then the next thing you see a candle sweeping the highs or the lows of the accumulation and then going back into the structure. Now, whenever there is something like this, which is an accumulation, we usually expect a breakout of that accumulation. So if we find out that the market has broken out, most times we're going to have a retest and the market continues going, right? So how do you know when it's going to be a normal break and retest or a manipulative move? So this is a very simple way to understand that whenever there's a breakout of an accumulation phase like this, when the market slowly returns back to that area of interest, right, that is usually considered a normal break and retest. But whenever there's a breakout and the market immediately drops back into the structure like this, back into the structure, that is a manipulative move, right? That is pure manipulation. So when you spot that, you just know that the market is about to drop in that direction or in the opposite direction if it's on the flip side, right? So that's the AMD concept. Then the next thing is to understand the forms in which this actually appears, right? So since it is a candlestick based, remember this is a candlestick based entry model. This one that I just drew is like, a line chart kind of thing, right? But it happens that when you see that kind of move, right, this is what it looks like on the candlestick based strategy. So let us assume this is the pull, the buy candle. So I'm going to change this to something green, and then the first one you can see here is the tweezer setup, right? So we want to see a nice impulsive move, a healthy candle pulling out of the structure like this. Then remember the next candle, which is the manipulative candle, will drop back into the structure, right, into the structure. So this is a sell candle, and we're going to make this what, red or pink, right? Now, when you see this, this is a tweezer setup. So we have the accumulation, we have the manipulation, the market is dropping back into the structure, forming what looks like a tweezer, right? That's why we have the forms, right? The first one here is the tweezer setup, forming what looks like a tweezer. Now, the moment you see this, this is your confirmation, right? Now, the next one is the engulfing setup. Sometimes it may not be a tweezer, sometimes it could be an engulfing. Either way, the psychology behind this is that there is an inducement to the upside telling us that, oh, we want to continue buying. And when you have a strong momentum buy like this, what you usually expect is a continuation, right? That's what a lot of retail traders will see and want to jump in on a buy. But eventually you see that the market will drop back into the structure, either forming a tweezer or an engulfing. Any of this one, that's either of the two, will tell you that the market is about to drop massively, right? Or we can have the third one, which is the harami setup. Now, in this case, I don't really use the harami that much, but sometimes it comes in handy. Sometimes you can have the next candle dropping in like this. It is not necessarily an engulfing or a tweezer, but it has a kind of momentum, and sometimes it could be two candles, right? Could be two candles, but we just call this the harami setup, right? It could be two candles, and then the next thing is you expect a massive drop to the downside, right? So these are the forms that it usually appears. And for the whole sweep, the liquidity sweep that we see, it also comes in different forms. Sometimes it could be just, you know, a trend line liquidity. Sometimes we could have several weeks around here, then one candle will pop out. I will show you so many examples when we get to the chart. Now, the third thing to look at here is how to execute when you spot the sweep. So when there's a sweep, you've seen the candlestick appear. How do you execute? So we have three types of execution here: the instant entry, 50% retracement entry, and the protected area entry. I'm going to show you examples on all three of them, right? So the first one is the instant entry. So whenever I spot, you know, I usually use the tweezer setup or the engulfing. So when I see something like this, now the market will give you a push, right, to the upside. Then the next candle will start dropping. So let's say the candle is somewhere around here. It's still forming. It has not closed yet. That is not the signal. That is not the sign. So what you want to see is this candle dropping all the way down. And when it closes as a tweezer or an engulfing, for the first type of execution here, we have the instant execution. So the moment this last candle closes, what you want to do is just instantly execute your sell. It's more like an aggressive kind of entry, right? So that is the first instant execution. Or even if it appears to be an engulfing setup, all you just want to do is the moment candle closes, it has given you the confirmation you need. You just need to enter straight up, right? But there are some times that we can use the 50% retracement entry. In this case, we're looking at 50% of the last candle, right? So when this candle closes, you may not want to enter immediately, just in case maybe the stop loss might be too big, because normally your stop loss is supposed to be above this high. So if the stop loss is too big, what you want to do is wait for like 50% retracement, which is a psychological level, right? So you want to look for the 50% somewhere like this. Let's say we have an hour here, right, which is around the 50% area. So you just want to wait for price to retrace back to touch your 50% area. And sometimes you can go into lower time frames and you would see even more areas of interest inside that aligns with the 50% for you to take your entry, right? So for the next one is called the protected high or the protected area entry, right? So whenever you spot a liquidity sweep in any area like this, what you want to do is, in case you missed out, maybe the sell was so long or the market already moved without giving you any form of entry, just allow it to go. Now, anywhere you have a sweep, trust me, there's always going to be what market coming back down there to, you know, pick up for the next re-entry, because this high becomes a protected high. This sweep becomes a protected sweep the moment there's a break of structure. So market is always going to come back to this area to retest and then continue dropping all the way. Now, the fourth criteria here we're looking at is all of this, the first three must be found in an area of interest. they must be found in an area of interest. You don't want to just see this sweep happening in a random place without any extra confirmation and you just get in on the trade. No, they have to be in an area of interest, maybe near an order block, near a supply or demand area, stuff like that, right? Basically has to be around an area of interest. So now let's get into the chart and let me show you a few examples that I already have laid out for you right here. Okay, so the first example we can see here is this one right here. Now you can see that the forms, I have so many examples to show you guys so that you will see how it appears in different forms, right? Now we have an engulfing here. Now this is an area of interest. You see how market was given a trend line kind of liquidity. Then we have this candle popping up, right? This candle pops up telling you that there is momentum to the bullish area, right? But it is just reacting to an area of interest with a massive momentum candle. Then the next candle immediately drops back into the structure, forming an engulfing. Then immediately after the close, you can see that there's no much retracement. The market dropped instantly. So if you use the instant execution method here, you're in and making massive profit already. Now here is another example right here. Now, like I said, it's going to come in different forms. So you're going to have to watch this video again, you know, to make sure that you see these different examples and different ways that it actually appears, so that whenever you spot it happening, trust me, you would find a very good way to enter the trade. Now, this one looks like a trend line liquidity point. We see so many rejections and market could not break past this area. Then the next candle just bullishly pushes up, right? Massive, nice bullish candle with momentum, closed really healthy and all. Then the next candle dropped in. Normally, when you see this kind of bullish move, this is a breakout of this massive resistant area. We're expecting to see a continuation. But what happened? Market dropped. The next candle dropped back into the structure, forming an engulfing. And from there, you get in, even if you get in on an instant execution or you get in on the 50% area, your stop loss is going to be above here and you're still safe. The market dropped massive peeps, guys, right? This is another example. Now here is another one right here. This one was one of the trades I took. You can see it here. You can see all of these wicks, right? Market, so I have a break of structure here. This is a supply area, an order block. Now market started giving these rejections and all of a sudden I see this nice bullish candle popping up. Then what happens next? The next candle drops back into the structure. Now look at the area, 50% retracement, and what happened? Snipe back into my entry and massive drop. This is a really cool one. So like I said, this is massive and it always happens, right? You will see it so many places on the chart. Now, right here is another clean example, right? We're not going to dwell on this that much. We have this push and the market drop back into structure and dropping all the way down, right? So let's proceed. We've got more examples. Now, this is another one right here. Very beautiful setup. Now, you see this trend line liquidity, market ranging all around this area. Then we have the breakout. But what happens after the breakout? Market pulls back into the structure, forming a tweezer, right? From here, this next candle buys all the way to this area right here, massively, and then retraces back, still respects this area, and then pushes up again. A very, very nice setup right here. So let me see. I think I still have more examples. Yep, this is another one. Like you can see, literally I'm on the same GBP USD and you can see how this entry criteria is just happening in different places. So you can literally be taking advantage of this as often as you can. Just spot it. You just need to train your eyes on how to spot this kind of entries in areas of interest. Remember that, right? So you can see this one right here, a very beautiful setup. Now this one, we had so many weeks here. Let me take out this box. So many weeks, right? So it's a resistant area. Market kept rejecting from this point, rejecting, and then this candle gave a bullish momentum, closing above all the rejections, right? What does that tell you? We have momentum to continue going up. But then again, the opposite happened. The market dropped back into the structure, forming a nice engulfing. You can see that this one, maybe you might miss out on this one because the engulfing was way too much and then market didn't give the 50% immediately, right? So it had to drop, then it came back to respect it as a protected area, right? So I'll show you another example. Let's see right here. So we have a protected area entry, a beautiful one. Now this setup was a setup I actually took as well. Now you can see right here, we had this nice push to the upside after closing above this high, taking out the liquidity above here, then the market drops. Now, this is a very typical example of those kind of long engulfing candle that you may not be able to take immediately, right? So if you miss out on this, just wait, because this area is now a protected area. This high is a protected high because it swept liquidity and it broke structure twice, right? It broke structure here and here. So obviously when the market comes back, it will always respect it as a protected area and drop again. Now, even inside this area, we had two more entries, right? The Harami entry and the engulfing entry. It gave us two signals to jump in on the sell as well. Now, this is another example where we have market taking out this equal level, this double bottom, sell candle momentum, very nice, close bullish with, you know, nice body and everything. And then what happened next? This market pushed back up, but it didn't quite engulf, neither did it, you know, give a tweezer. But this is what an inside bar, a Harami candle. And then from here, we can see massively buying. The same thing here, massively buying. Guys, I can go on and on. Look at another example right here, right? A sweep, sell sweep, tweezer, and a drop. Like, I can literally show you so many examples, guys, because this particular entry model works like wildfire, right? Okay, so this is one of the best entry models that I have and I use. I'm pretty sure that you found value in this video. Make sure that you go back and watch this video again until you understand this concept really well, because it's going to change your whole trading game entirely. Trust me. Right, so I hope you got value from this video. This is actually something that I use often, and it has actually changed the game for me, right? So make sure you like this video, make sure you share it to someone that actually needs this as well, a friend that is trading and struggling. You know, this is going to actually help. So like this video, let me know what you think in the comment section, and definitely subscribe. Turn on the notification bell so that you can get notified when I drop value like this for you. All right, see you guys in the next video. Bye for now.